Hello traders, in today's video I want to show you a way to trade with new models that the master came up with and that are very exciting in my opinion. In his latest video, the link is in the description, he explained that there are three defining ranges. The after session defining range in the Asian session, the ADR, then the ODR, which is the overnight defining range in the London session, and then we have the regular defining range in the New York session. The new version of his indicator displays these three ranges. Here we have the Euro USD 5 minutes chart, and I activate the indicator and you see we have three boxes for Asian, London and New York session. The constellation of these defining ranges represent trading models for which I show you now an example. Here in the Asian session we have the ADR and here in the London session the ODR, and you see the ODR is above the ADR. The master calls this an upside expansion model. In this the high, low and middle of a defining range is above the high, low and middle of the previous range. And here you see the same applies to the regular range. It is expanding and this gives us a direction. So basically my direction here is bullish. But here in the London session we see that the low of the ODR is broken to the downside. Usually when I see this I'm looking for short trades, because I know with an over 80% probability the high of the DR will not be taken. But on the other hand I know that we have an upside expansion model and that a short trade is against this trend. So when I take this trade I keep my take profit pretty tight because I know it is counter trend. The take profit in this case I set to the low of the Asian session, but I also like to activate an indicator that is called MTF candles to display higher time frame candles inside of this chart. This one here from YA Trader 2. After activating this you see that we have higher time frame candles, in this case these are 1 hour candles, below the 5 minutes chart. You can define the resolution in the settings and I set it to 1 hour. Now why is it useful? Well, first of all to define take profits, because you see at this level here that 1 hour candles are not closing below this level, which defines then the low of the Asian session as well, pretty significant. And as I said, when going short, counter trend, I define this as my take profit. But as I said, we have an upside expansion model, so I'm looking for trades to go long. And here you can see we have two 1 hour candles that don't want to close lower than this level. And this is a nice confirmation that this support is pretty strong. So when I'm looking for buys, I can go ahead and use a 5-minute rejection candle to go long at this level where two 1 hour candles rejected to close lower. Trades like that are of high probability in my opinion, and you see when we are closing at the high of the session or just at the high of the ODR, this ends up in a 4-hour trade. The expansion continues in the New York session. You see all levels of the RDR are higher than the levels of the ODR. The 1 hour candles gives us a new level of support that is not broken, we are rejecting with a 1 hour candle. Price is coming down to this support and we can use price action on the 5 minutes time frame like pin bars or bullish engulfing to enter a buy trade. In this example I also have the 50 EMA activated as a second confirmation. Now that we know that there are three defining ranges, we have so many new opportunities. Here's a simple example for an ADR trade on Euro USD to the downside. You see the ADR low is broken, FVGs are forming, we have a retest at the lower IDR. You see this level of resistance is not taken, and then we have a rejection candle which is a perfect entry short. The take profit I like to set to previous lows or the low of a previous session. The stop loss here is pretty tight. Depending on your personal risk management and trading style, you can increase it, for example, above the mid-level of the DR. Okay guys, I recommend to join our Discord, the link is in the description, where we talk about trades like that and where I'm also sharing trades that I take or consider to take. I share these in the TG Trades room, and you need the TG member role that you get when you subscribe to my YouTube membership. The link is in the description. This is the chat from today. You see the guys are making good profit. Here are the trades that I announced today on EU and GU, and that played out pretty good. It is not a signal service, it is not a financial advice. I tell you what I do, you can do what you want. You can ask me for my opinion about your trades or something, and that's it. Okay, but there is more. Here's another model that the master calls the range expansion. So I said here on Twitter, okay, have a look at this. We have the ODR that is kind of encapsulating the ADR. So we have a range, but the mid-level of the ODR is slightly below the ADR, and this gave me bias. And the next very important addition to this bias is a 1 hour candle closing below the low of this ADR. So my bias is bearish. I will show you how I enter in a moment. And even the master told me here that I'm on the right track. So my entry is this. We broke the DR level here with the 1 hour candle, very significant. And then price went up in a steady move. It reaches the IDR, and the 1 hour candle, the green one, is not closing above the resistance. Instead, we get a nice price action, a bearish engulfing to the downside after the close of the 1 hour candle. If you think that my stop loss here is too tight, well, then you can bring it up to a previous swing high. My take profits are set now to the IDR or ODR low, or just wait for the 1 hour candle to close, which is a 5-hour trade. But my last question in the tweet was if we are going to reverse in the New York session, or if this downwards direction is to be continued. So what I see here at the moment, when we are comparing the ODR to the RDR, then I think this is a downside expansion model. So my bias is short. Potential entries I see here at the break of the RDR low, and I would be in profit already. So guys, we are talking about scalping here. We are talking about very low time frames. For this you need a broker with low spreads and low commissions, and I can recommend Hankotrade. The link is in the description below. You don't need KYC documents, registering is very easy, just go ahead and give it a try. Guys, I hope you liked the video. If you have any questions, then add these to the comments below. Follow me on Twitter and go to my Discord. In the member channels we talk about the trades that you just saw, and you can ask me there anything. Thanks for watching, and I'll see you in the next one here on the Trading Guide.